Okay, hey everybody. Today we wanted to take a look at what can you expect to set up or use for your taxes, your expenses, and your deductions. So you have your business all set up. You're a sole proprietorship. You're a LLC. You're a corporation. Whatever. Well, what can you claim are legitimate business expenses? What does it take for you to make money? Okay. So there's a number of things you can look at. So let's start kind of at the top. You have your phone, all right? Now, unless you have a business phone, and that's the only thing you use that phone for. So you probably have two phones. You have a personal phone and a business phone. If the business phone is 100% for business, fine. You can claim the expense of that phone 100%. But if you're using your personal phone, so that's what's on your business card or what's on your website or what's on your Facebook, call this number, but it's also your personal phone, you cannot claim 100% of the bill for your phone as legitimate business expense. Now let's say you use it, well, 80% of the time is for business. Well, I doubt that. However, you know, the tax people aren't dumb, you know, and they're going to make you prove it. They're going to make you bring in a bill or print out a bill and highlight every call or every text or whatever that you sent that was business versus your personal. So the whole idea of this is, let's say you do use the phone, say 75% for business, okay? You're going to claim like 60 or 70%. You're not going to claim 75% because you don't want to get to the tipping point where it looks like you're scamming people, right? That you are claiming more than what you're actually using it for. So you need to be conservative on the side of what you're looking at in terms of how much you use the phone, okay? So it becomes how much? How much, okay? What percentage, okay? The next one, let's say, is going to be a car, okay? Now, mileage, okay? You used to just be able to punch your trip odometer at the beginning of the day, which is what I used to do. And I kept a logbook in the car, a little spiral notebook, a little tiny thing. And I'd write down the date, and I'd hit the trip odometer at 0, and I'd write down, you know, the 2 or 3 clients I was going to go see that day, and then I'd leave the driveway. And then when I'd get home, I'd look at the trip odometer and see how many miles I put on, and I would write that down in the book, close the book up, put it back in the glove box or wherever, and at the end of the month, I'd transfer all that information I had in my little book, and that would be part of my tax record as to what I spent. Now, it's changed, and now you have to actually write out the starting mileage and the ending mileage, and you can't simply hit the trip odometer and say I went 96 miles today. You have to write out, you know, 14,000 miles, and then you get home, it's 14,096. You have to write down the actual numbers and the dates and who you went to see. Now, we did that earlier in the semester where we looked at what does it cost you to drive a car, all right? So that's why I had you do that, and you probably need to revisit that. So what does the Internal Revenue Service say you can claim as mileage for a car? It changes every year. I don't know what it is this year. 35.5 cents a mile, something like that. I forget what it is. 50.5, I forget what it is. You have to look that up. And see, you know, that you should be taking the mileage deduction for your business, because most likely you're going to be driving a fair amount. So you want to take advantage of that and be able to claim that. Now, you're not going to claim 100% unless, of course, you did how I set it up, where I was a corporation and the company actually owned the car. My business company name was on the title. Okay? Now, the other side of that happens, right? Because you have to say, do I use this car 100% only for business? Well, of course not. I did go to school 2 days this week and pick up my daughter. So I used to make sure, and remember, I always did everything on my American Express card. So I make sure that every so often I would fill my car up with gas out of my personal account. Or I would go get an oil change done and pay for it out of my personal account. Or when I went to buy 2 tires, I would buy 1 out of my personal account. You always want to be conservative on the side of how much you're claiming you use things. Okay? So let's get to maybe your office. Okay? And it's at home. Okay? Well, how much space do you dedicate to the office? So that's one. Now, do you use that space for anything else? See, it's really difficult to claim, I use this 100%. What about your computer? So you never go to YouTube or never watch any other or never do any emails or Facebook or whatever you do on your computer that's personal. You use that 100% for business. If you can say that with a straight face and have the ability to prove it, meaning I use this computer for work and this computer for home, and I've got 2 separate computers. I only use my office for work. I never go in there and use it for anything but work. Remember, it's kind of the opposite way around with the law here. It's not innocent until proven guilty. It's guilty until you kind of prove yourself innocent, so to speak. It's not quite like that, but they're going to want to see proof. If you get audited, they're going to want to see proof. That's all there is to it. You have to prove that you are using this office space 100% of the time for office. Okay, so it's 98%. Well, no one's going to bust you on 2%. But then don't claim 100% usage. Claim 95% usage. Claim 90% usage. Okay? So, you know, there's a lot to it to make sure that you are accurate in what you're claiming. Okay, expenses. You buy a new camera. Okay, great. You can expense that and remove that from your taxable amount that you're going to owe, because that's an expense of your business. You expense it. You can also what they call amateurize that or schedule that out over 2 or 3 years. If you want to take, say it's a $1,000 camera, you can deduct, say, $333 a year for 2 or 3 years. I forget how exactly those schedules work. I always just bought stuff and expensed it out in that year, but sometimes that may not be the best strategy. You may need to extend it out for 2 or 3 years. Okay, what can you deduct? Everybody says, well, clothing. I only wear this clothing for work. Well, the IRS says can you use that clothing for anything else? Well, the answer is yes, unless, of course, maybe it has your company logo on it. Now, that could be claimed as that is a business and that's a piece of advertising because you have your logo on it and you wear this wherever you go to advertise. Then you could claim that piece of clothing, only that piece of clothing, as a legitimate deduction on your business expense. Okay? So I know a lot of photographers that bought tuxedos to do weddings with. Well, I only wear the tuxedo for doing weddings. Well, can you wear the tuxedo to a party? Yes, you can. Therefore, you cannot deduct the entire amount. You might be able to deduct some of it, but I doubt it. The issue is, can you use this for something else besides just business? So you always have to look at what you're buying and how you can use it. Okay, what about food or lunches? You're taking a client to lunch. Okay, how much of the lunch can you deduct as legitimate business expense, right? Well, you have to eat. So you cannot deduct what you eat. You can deduct what you pay for them if you're taking them out to lunch. I would also write on that receipt, met with John Frank of John and Betty Frank for doing their wedding photography or whatever, or put their names down. You're going to do weddings for these two people. Write their name down, write wedding. Remember, you have to prove that you were doing this, that you were legitimately taking these people to lunch in an effort to secure their wedding as an advertising, okay? Now, let's say you take the Franks to lunch 3 or 4 times. Can you claim that? Yes, you can. Now, if you get the sale at the end of the 3rd lunch or whatever it is, okay, then write that down. Secured the sale. It was a $3,000 wedding, whatever. Write that down on the receipt. All you have to do is show that. If you get audited, and they'll go, fine, next, right? They're not going to argue with you. If you've got proof, keep the receipts, get a book, keep stuff in it. Sticky glue stick works good. Put it in a book, make a note on it. Okay, on a piece of paper, stick it in there. And you know, you have to keep proof of it. There's a lot of apps for phones now that can help you do it. You could take a picture of it, right? Make sure you back up the phone, right? You can take a picture of it. You can write a note attached to it. Lots of apps to help you do that kind of stuff nowadays, okay? So a little bit about, you know, what can you claim, what can't you claim as far as your expenses go. Like, I used to go through a lot of AA batteries because I shot a lot of weddings from my flashes. Yes, those are legitimate business expenses. I can't take the picture without the flash, okay? That's fine. Right? Film, obviously. The photo lab, obviously, back when we were processing film. Okay, can you claim your Adobe Photoshop subscription? Yes, you can. Right? So you start looking at all of these things that you have to spend money on in order to make money, right? So there's a way to look at all that stuff and say, do I use this 100% or not? Pick a percentage. Be fair, because you're going to have to back that up someday if you get audited. Okay, so that's a big deal about expenses and deductions. There's one more thing that's critical. You must charge 6% Michigan sales tax. You must charge it, collect it, and pay it back to the state. But photography is labor, Mr. Rentschler. Yes, I know that. But in the Michigan law, it says photographers and photo finishers, so photographers and photo labs, you must charge 6% Michigan sales tax on your labor. And I got caught on this, that's why I know about it. I got a phone call from the state of Michigan, and I had a $100 invoice. Okay? And the invoice was $50 for labor and $50 for 8x10 prints. 6% of $50 was $3. So I charged $3 of sales tax, collected the tax from the customer, paid the tax to the state of Michigan. They called up because the company I did the work for got audited. And they said, where's our other $3? And I said, what are you talking about? I itemized that out. It was $3 in tax, $50 in sale, 3% or 6%, $3. I charged the $3 sales tax, I collected it, and I paid it back to the state of Michigan. They said, where's our other $3? I said, that's labor. They said, you're mistaken, Mr. Rentschler. You must charge 6% Michigan sales tax. So if you have a $100 bill to a client, it's $106. You must charge that, collect it, and pay it to the state. They went back 3 years on me to try and collect that difference because I had been breaking out my labor from my sale of like 8x10 prints. So I owed them approximately 50% more in sales tax for all those 3 years. Needless to say, it was a large sum of money. Now, I'm not going to be able to go back to my clients and say, hey, can you pay me that other 3%? Yeah, I'm going to lose all those clients, right? So you had to figure out a way to pay for it. So we did. We set up a payment plan and paid for it over time, and everything worked out fine in the end. But I'll tell you, I have had 2 tax issues in my life. One was with the IRS, one was with the state of Michigan. I would much rather deal with the IRS. They were fair, they were polite, they were nice. They said, here's what we think you owe. I said, here's what I think I owe. We settled on a number, and I've made payments to the IRS. And I would call them every so often and say, hey, I got a payment coming in, recalculate the interest. They were polite. I dropped the checks off. One was up in Flint, the office was in Flint. It was a very cordial relationship. They were very nice to me. State of Michigan, it was awful. They were absolutely horrible to deal with. They acted like it was their money. It was a legitimate mistake. I had paid some of the tax, so they couldn't penalize me because I didn't try to avoid the tax. So I just paid the difference over a time period. We were able to extend this out quite a ways and get some of it to drop off due to statute of limitations, so we were fortunate in that regard. But talk to a lot of tax people, they will say the same thing. The state of Michigan people were not nice, not polite. They were angry, they were mean, they were condescending. They were not, polite at all to deal with. So, the old line from back in the day, right? Render unto Caesar what is Caesar's, right? That's a line from a long time ago about paying your taxes. If you owe 6%, pay the 6%. Just suck it up and be done, okay? All right, so a little bit about taxes, expenses, and deductions, and see you next week. Do your homework. Okay, bye-bye.